Big economic news today.
Yeah, today's song goes out to Jerome Powell. If you missed the story, well, where have you been all day? The Federal Reserve, as expected, cut interest rates today, but rather than playing it safe with a quarter-point cut, the Fed came on big with a half-point cut. That's a very, very aggressive move. And this is the first rate cut in 4 years since the Fed started tackling high inflation by deliberately cooling the economy with the highest interest rates in 23 years. Well, it's taken a long time to get us from a 9% inflation rate in 2022 to where we are now, just above the target rate of 2%. And so now the Fed's out with that big, explosive half-point cut. What does it mean for you? Well, first of all, it means that obviously borrowing is going to become cheaper. You should expect credit card rates, which now average 23% on an annual basis, to come down soon. Already, auto loans and mortgages are trending lower. A 30-year fixed now runs 6.1% on average compared to 7.2% last year. That's going to come down as well, but it'll probably take a few months for the mortgage market to reflect all these lower interest rates. For savers, well, obviously savings accounts, certificates of deposit, money market accounts, they're less lucrative, but really, when your interest rate is 0.005%, what's the difference, right? You might want to try and lock up a CD now if you want to put some liquid cash somewhere safe. All right, so some traders on Wall Street today got a little concerned, and the Dow ended about 103 points down after surging 375 points earlier because some thought, oh my goodness, the Fed is pushing the panic button with this big industrial-sized rate cut. Au contraire, says the Fed. They say that softness in the labor market is one key reason they felt that a larger rate cut was important. But here's the takeaway for today, and that is it's a turning of the page. Up until now, it's been all about bringing down inflation. Now we're looking ahead to keeping us out of a recession, bringing about that soft landing for the economy, and then bringing us back up to a normal course of business. But the Fed made very clear there's not any kind of new agenda for bringing rates down to a certain level. They're going to take it step by step. What you can expect now is we have today's rate cut. There's probably going to be 2 more rate cuts this year. I'm going to say they're both going to be a quarter point. And then next year, according to analysts, maybe 3 more rate cuts as well, each of a quarter point. So we're going to start seeing borrowing costs going down. And from a stock market point of view, that means there's going to be a flurry of corporate growth on the horizon. That's going to be good for stocks.
You made this point earlier. This is good news for borrowers, but if you want to save, you mentioned a CD, put your money in a CD or what, high yield savings account?
Money market account, things like that. I mean, there are places to park, but let's face it, the interest rates that are offered by banks for savers, not very attractive. And I can guarantee you, after today's rate cut, banks won't hesitate at all. In fact, they've probably already done it. They're going to cut rates right away for savers because that's one place that banks figure, what the heck?
Yes, but we won't see the interest rate for mortgages really drop immediately.
Well, it's already coming down. Make no mistake about that. But if you are in the market for a home, typically it's going to take a few months for all these rate cuts to filter in. Figure the first quarter of next year is your sweet spot for trying to get a new mortgage.
Interesting.
Yeah.
All right, Chapter 11 for a once very lucrative sales business for women in maybe, what, the 50s, 60s?
Yeah. Introduced in 1946, as a matter of fact. We are talking about Tupperware, which basically pioneered plastic food containers. It was invented by a chemist back in the early 40s and then was unveiled just after World War II. And that's not the only major claim to fame, because Tupperware also pioneered Tupperware parties. And I know young people are going to think, what the heck is that? What that was is people would come together, typically in suburban homes, for parties hosted by suburban women where they would pitch these Tupperware containers. And if that seems quaint, well, yeah, it was. But at the time, it was a way that you brought people together and you moved merch. And apparently it was successful enough to make Tupperware the leader in the market. But the company is really a victim of its own success. All of the people who started looking to these plastic containers, well, suddenly there were other rivals on the scene. Hello, Rubbermaid. And then gradually you started getting plastic containers coming from overseas at a fraction of the cost of what Tupperware or Rubbermaid would charge. And Tupperware parties, well, they fell by the roadside once the internet came around and everything shifted to e-commerce. But there are other elements of this as well. Tupperware has been struggling for a long time to get by. They're carrying about $700 million in debt, and they've been trying to work with their lenders to reduce that load, and lenders have given them some breathing room, but not quite enough. In June, Tupperware had to close its only U.S. factory. It laid off about 150 people, but now it says with this Chapter 11 filing, it's going to turn things around and come back presumably leaner and meaner. I'm not so sure, though. I don't think the marketplace for plastic food containers is as robust as these guys think.
Well, and how can they compete with overseas competition?
Precisely. I mean, we store a lot of food at our home, and quite simply, Tupperware is a kind of an extravagance for that kind of thing.
Plus, I mean, we're doing stories nonstop about all the things inside the plastic and touching our food and how people are switching to glass, and
Yeah.
might just be the end of that road for expensive plastic Tupperware.
It's a shame. I mean, like I said at the outset, this is an iconic brand, and it's one that pioneered its marketplace. I would think that the trick for Tupperware is trying to turn it into a nostalgia play. Make it, turn it into something like, this was good for your parents, it was good for your grandparents, it's good for you. Although I'm not sure Gen X will buy that.
I'm sure.